Good morning, everyone. Welcome to binary.com. My name is Chris, and we're going to take a look at the Forex market together here at the weekly live room, as always, starting at 8 a.m. UK time on Mondays. Alrighty, with that said, let's head over to take a look at this PowerPoint before we actually look at price action to explain, for instance, this risk disclaimer. The trading for exchange or global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational and informational purposes only. By continuing watching this webinar, you agree with the disclaimer and the content mentioned here. Alrighty, so thank you for your attention on that. Once again, if you want to take a look at the recording instead of this live webinar, you can register via blog.binary.com/weekly trading room with your name and email. That would be sufficient to get an email with the recording when it's uploaded. That should be within a few hours after this live session. As always, our goal today is going to take a look at the economic calendar, the euro dollar, pound dollar, the dollar yen, AUD USD, etc. And that will be, of course, our main focus. Then we have the XAU USD as well involved. So we'll take a look at that. So first of all, take a look at the calendar. We had last week, we had actually the NFP and interest rate announcements. So that was a bit of an interesting setup there because of the euro dollar drop, but then rise after the interest rate announcement. Did drop the interest rate, but not enough supporting factors maybe to weaken the euro more. So we saw a rebound pretty quick. Today we have bank holidays in France and Germany. NFP was a bit of a mixture. It was just a flat result, actually, just like expected. So it had a bit of a volatility, as one could expect, connected to NFP, but not a significant follow through, not a significant day of price action, not a significant deviation from the expectations. So the biggest, I would say, the biggest impact of the two events on Thursday and Friday last week was the euro dollar, and we'll take a look at that in just a second. First of all, I want to go to this calendar so you can see. Let's see, we have French and German holiday, as I said, and also Swiss, in fact, and Holland too, I know by heart. So parts of Europe closed. We have otherwise throughout the week some usual red tagged events. The Kiwi interest rate, official cash rate, is on Wednesday. That's something to keep an eye on. Plus pound unemployment, and otherwise the usual events, nothing spectacular, just the typical red tagged events that we always have to keep an eye on. Alrighty, let's start with the euro dollar. What I wanted to show you first of all was this euro dollar bullish engulfing twin. That is a big sign. That is a reversal sign. That is totally engulfing Wednesday's candle. Friday was just a small day here. So that looks still bullishly set up. If you look at the big wick on Thursday, plus the strong bullish close towards the high of the day, that has bullish power spelt all over it, right? The wick, the fact that it was engulfing Wednesday's candle, the fact that the close was near the high, that is a strong signal from the market, undoubtedly. So the future of the euro dollar looks bullish, but how far and when and where? Those are more questions on my mind than what the direction is. I would be surprised to see a break of this bottom, but you never know. Of course, in Forex, nothing ever is 100% guarantee. One thing that is close to a good idea of what could be useful is, for instance, a fib like that. Remember, we had the fib on this to this bottom. You can see how the market respected the minus 272, then the minus 618, and then went down to the minus 1000. So that's pretty neat. Other than that, let me take that off because that has happened, but just wanted to show you how these fib targets are respected, and usually they're bouncing spots when price gets there. Either bouncing spots, right, or reversal spots. So that last one seems to be happening now with the euro dollar, looking at the bullish engulfing twins. We also had, between these 4 hour bottoms, divergence. So that's what we discussed last week, a week ago. This has divergence. Be careful, right? Now, we did get a break of this support and we did get a fall, but we got a very quick rise. So that divergence is having effect, I would say. If you look at the daily and a 4 hour chart, you can see that the potential turnaround is on its way. In my opinion, only one resistance, maybe one or two resistances standing, like this red level. A break through that would be pleasant. One more clue that we could have, maybe a potential turnaround, is if you look at the weekly chart, what do you see? A big pin bar. That too is an engulfing twin as well, because last week's candle totally engulfed the candle of 2 weeks ago. And there's a big, big, big wick at the bottom of last week's candle. Look at that. Big wick. So that looks bullishly set up as well. So a break of last week's high would be a good confirmation of some potential upside, I would say. But maybe there's another way. Let's take a look at the hourly. One way is a break of that high. The other way of looking at it is saying, okay, if price gets back to support levels, if you look at the hourly, this big upside is basically the engulfing twin on the daily. So what that means is if price were to correct down to, for instance, the 50 fib, or the 61.8 fib, or even the 78.86 fib, as long as price doesn't break this bottom, it could be any of those fibs in fact, then there could be a bounce at one of those fibs for that upside. It would be retracing the daily candle on this hourly, for instance, right? Or retracement on the daily. Price will be retracing part of that daily candle by going down and then bouncing up. That could happen. That's interesting to keep an eye on, in my opinion. The bottom is always critical. If that gets broken, this particular analysis would not be valid anymore, and there should be bearishness in the market, in fact, sooner or later. Personally not expecting it, but if it does, then that would be the consequence and interpretation of that fact. If we don't retrace this deep, if we don't go back to the 50, if we don't go back to the 61.8, then I would expect price to go through this resistance. Then there should be potential roughly to go up to the next resistances. And the next resistances could be this 137.30, this 139 level here. Actually, we can put a fib on this entire downside, and we could view, for instance, the 61.8 and the 78.6 fib and the very, very top right here as those resistances. All right, so basically we can see confluence between the 50 and this resistance here, and the 61.8 and the 78. Those will all be resistance potentials there for a move down, or at least a bounce down. So upside, but then eventually we're going to bump into some levels that price could struggle with getting follow through to the upside. As always, if you have questions, let me know and we can take a look at those. But the euro dollar looks interesting to me. Just a question of when and where. To me, definitely looking bullish, but you never know, as I said, but to me it does. And I'm looking for an interesting spot to try to take a trade up towards resistance. Pound dollar is a bit different. Pound dollar broke out of that uptrend channel. That uptrend channel is indicated by the blue lines, and basically price, has broken out of that, but it is still above horizontal support like this 166.60. It actually has even a bigger support down below, but we never got that low. So the question is price indeed going to continue with this correction downwards? Is price actually hooking back to the broken trend line for more downside? Or is price going to break above it for more upside? That is something that I'm very interested in and very curious. And I'm going to keep an eye on that green line specifically to see which of the two is more likely. Now, if we get a break of the green, that would be a decent chance that we might see the breakout to the upside. If we don't, and we see a bounce off the green line, then we would see maybe some continuation to the downside. So that green line that intersects with the blue line and price is right at it is what is called a decision point. It's a bounce or break spot. Prices has to show its true color now. Is it bullish or bearish? If it's going to intersect and cross the green and blue confluence, it's looking more bullish. If it's going to hit it and then bounce and then probably break through the support like that, then it's looking more bearish. Right? So that's what I would say is at the moment, the most likely scenario. If we break blue and green, be careful. There is a 168.80 target and resistance. So what we could see is, for instance, a break and then a correction back like that, and then maybe a bounce up to higher targets. Something like that is what I would expect. If we don't break to the upside but actually start to break to the downside, then I would expect price to break through below this green level before bears are really fully in control. So that's from the hourly and 4-hourly perspective. From the weekly perspective, bullish candle last week, so the bulls were in control. That's about it at the moment. Otherwise, I have nothing to add. Besides the fact that if we do get a breakout to the downside, I would still be careful of the 50 fib, by the way, at 167.72. So, and any of these fibs, because they could still be bouncing spots. So I would keep an eye on this fib. If we do break to the downside, if we break to the upside, I would keep an eye on these targets. And I would be looking for dips and pullbacks before attempting to trade it to the upside, because otherwise there's really not much space to that upside. Alrighty, let's take a look at the AUD USD. Now, funny enough, AUD USD is looking similar as to the pound dollar. Very similar position. The pound dollar too broke out of its uptrend channel, just like the AUD USD. Price has broken out of that right here. It's not in the uptrend channel anymore, but like the pound dollar, it bounced off support, and like the pound dollar, it's actually right at a talking spot. Will it break this orange line, or will price bounce off of it? Now, if it breaks it, we have potential for price to be back in an uptrend breakout. If it bounces, then we might see the follow through if we break the green support line for that bigger down move. Now, at the moment, it's looking like kind of a bull flag in a way. So the break to the upside might happen. It might seem logical if you look at it from that perspective. We have, in a way, to a certain degree, we have this upside momentum followed by bull flag. So if we break the bull flag, you could have a breakout to the upside. Now, if the bull flag doesn't get broken, then this could be a channel start of the downside. We could see a follow through back to support and maybe a break of support before we really see further extensions to the downside. If we do break orange line, then, which looks like we're trying to do at the moment, then we can continue with this uptrend channel here on the AUD USD 4-hour chart, for instance, and hourly, and we could see potential breakouts. Now, if we do break out, I wouldn't be jumping on that trade right away then, right then. Personally, I would still be looking for a pullback like the pound dollar, a pullback like that for more upside before trading it myself, just because the AUD USD is quite close to the top of that uptrend channel. So in that regard, the euro dollar seems to have more space to the upside, at the moment at least, than the AUD USD. So although the breakout could be interesting, the problem is that the top of the channel is very close by, and that could be a resistance, and that's why I would be careful and rather wait for a hook back and bounce before trading it myself regarding the AUD USD in this scenario. Let me take a look at the weekly chart to see if I missed anything else. By any chance, we had already 2 weeks of bullish candles, so definitely the bulls in control at the moment. From a weekly perspective at least. And yeah, that's about it, I think. There's really nothing else to say. The bears were definitely in control here, but slowly but surely they're losing the control. But then again, there's a very tight range here going on between 94 and 92. We'll have to see basically whether price can break out of that to the upside, break out of the tops to the upside, or break below for more downside. Dollar yen. Dollar yen is in this upside momentum, of course, but now caught in a very tight range, as we know. It had a lot of steam here, but now going sideways for months and months, the whole year, in fact. You can see that sideways zone pretty good in this daily chart, in fact, and there's really no impulse, no momentum, no trend going on. That makes trading more difficult. I would like to see price box itself out of the to the upside, out of the green and then orange for real breakout potential to the upside, or it would have to break through this bottom for some reversal potential slash more downside pressure. If price stays between those, then there's a ranging mode going on, and it's difficult to tell what price could do. It's bouncing back and forth, in fact, at the moment. This 4-hour chart looks a bit different because we do have an uptrend channel in play on this dollar yen. Therefore, maybe if you look at the 1-hour chart, and see this uptrend channel, and then see this green line as a resistance, then the breakout above this green line could be a breakout trade. The only thing I don't like about it is the fact that although we have some upside here, the breakout to the upside will be very close to the 103 resistance, and that is a major level. And I would be careful of that because that's such a major resistance. So it might not be worth it because we've already moved up so much within this range that there's not much space left towards the 103 resistance. So I would be cautious. I would rather wait for a break here or a break here. The other option could be that if price does move up and hits this resistance, it could be interesting to find potential shorts from that level as a potential bouncing spot at that resistance. It's not the easiest trade maybe to trade, but it is a potential for more downside. The other scenario would be a break of this channel. That could also lead to a potential breakout to the downside, but be careful of this fib because that could still be support. XAU USD was breaking to the downside, is now getting a bit of a bounce. We could see maybe a hook back to the broken bottom before we find renewed selling in this XAU USD. We have a lot of downside pressure here, so we'll see if we could follow through. If we see any price action signals that are interesting at 1275 or at 1300, those could be great resistances for more downside. If price action especially confirms that potential of a bounce at those levels, then we might have the ability for further downside pressure there, and that would be an interesting potential for further downside down to these targets. All right, so that would be XAU USD. And with that said, we have gone through our usual pairs. Otherwise, I think that in this case, also a pair like, for instance, the pound odd and euro odds, they really move a lot. Could be worth keeping an eye on because, for instance, this pound odd is a big mover, and price is getting to an interesting situation where we have a lot of downside momentum here. If you put trend lines on this like that, for instance, you can see it's kind of like a triangle, or maybe even trend line like this, for instance. It's getting close to some kind of triangle break here with strong ups and downs. As you can see, a strong down followed by an up, down, up. So this could be maybe the continuation of that downside momentum prior to that. So that's something I'm definitely keeping an eye on. Looking interesting for a break to the downside. So something that you might want to keep an eye on as well. Well, folks, that wraps it up for today. As I said, you can always take a look at those crosses. Those are sometimes interesting as well. Like the euro odd and pound odd, those are big movers in many cases, or the euro yen, pound yen are definitely pairs that I keep an eye on sometimes as well. So just some additional info there. Thank you for your attention. If you have any questions, by all means, let us know. Here's one more time the link, blog.binary.com/weekly training room, where you can register and get the recording when it's ready. So we always, of course, thank you for your time and being here, and we hope that the session provides value. Also, of course, within your own limits. It's just for educational purposes. So use it wisely and within your own for your own benefit, as you, of course, are able to use within your own strategies and your own trading. That's, of course, primary focus. We'll be back next week, 16th of June. No, we won't actually. Excuse me. I cannot make it the 16th of June. Apologies. We'll be back the 23rd, in fact, 2 weeks from now. So next week, Monday, the session will not be hosted, but I'll be back next week, Monday, 2 weeks from now, Monday, on the 23rd of June. So looking forward to see you then. Wish you all great trading in the meantime and wonderful weeks ahead. Cheers.